Edouard François. First, it's not just capital market. Let's say we are also making some global financing, so we are just a French model, so a hybrid between lending and capital market. Regarding capital market union, let's say we are also, let's say, supporting the initiative of the Commission that was announced now almost 18 months ago, that is getting some traction. But we feel that the capital market union cannot, let's say, be the sole solution. It has to be strongly, in our view, aligned with banking union, because it's by combining the two that we will make, let's say, the European financial sector stronger. If I look, I would say, at the capital market union, and we discussed already the enablers that were proposed by the Commission, it's like designing the pitch. It's good to design the pitch, but on our side, we would like also to have a support for the players. This means that we don't want, let's say, to get the Premier League with only foreign players. We are willing also to get some domestic players which can, let's say, benefit from a level playing field on that pitch. That would work. And that's why I would say we feel that we are convinced that capital market union is good, but also we need to ensure that there will be some strong European investment banks active in Europe and especially in Eurozone. And why is that? It's not just because I'm working for Société Générale, but it's just also to be pragmatic. In 2011, when we've seen the Eurozone crisis, we've seen that suddenly all US investment banks were disclosing their exposure to Eurozone countries and were, let's say, willing to limit, let's say, to the minimum, or also to go to nil, their exposure to Italian debt, Spanish debt, French debt, because, let's say, it was considered as toxic. When you have, let's say, European investment banks, which are the decision-making center in Europe, I would say by nature, if we were using a term in finance, we are consanguine, but I would say it is our, let's say, raison d'être. So it is our raison d'être when you are Deutsche Bank to finance first the German economy. It is our raison d'être when you are Société Générale to finance, let's say, the French economy. And at a time where we know that the regulation will link to a more, let's say, volatile liquidity. We've seen that recently on certain market, I would say, dislocation that are the result of leverage constraint, balance sheet reduction. To have some players which are, let's say, strongly rooted in their country, in their home country, in their home region, which are there, let's say, to be to stay, is something important. So first, I would say it's about decision-making centers, and also being there, let's say, whatever the climate is. Second, I think it's about culture. It's about culture because we mentioned that in Poland, we mentioned that in Germany. Let's say each and every European countries are different culture. And when we say compared to the US, as you were mentioning, Hervé, we are not sure that the 80-20 ratio in the US is the right one for Europe. Just because, let's say, our saving systems, we have no pension funds, we have no, let's say, this type of large investors which are able to substitute, I would say, to banks is the right one. So we know that we have the 80-20 model on the other side, but we know also that we can move the line. And we can move the line when, let's say, we have the expertise and the scale to move the line. And France is typically the right example. France moved the line from 25% of capital market financing to almost 40% in 5-6 years, while at the same time, lending to corporates has continued to grow. So it was not, let's say, just a kind of zero-sum game. It was growing the lending to the real economy, and on the other side, providing easier access to capital markets for corporates, large ones. It was quite easy for them, let's say, to tap the bond market, but also, as we have discussed, mid-sized ones, so large ETI, in terms of getting access to the European private placement. And that, in my view, is something that is only the result of this close relationship that we have in the universal banking model between the proximity which is provided by our retail network, the deep understanding of the middle market, because we have, let's say, branches, and also we have this long-term relationship. And on the other side, the capacity, let's say, to have the skills in terms of product setting to bring solution to this middle market. And when we look, let's say, at the fact that in France, let's say, the top 3 banks in Euro PP are, let's say, I would say SocGen, BNP, CACIB, it shows that we are able to make it. We are able, let's say, to bring this expertise from the capital market to the middle market. And to bring it, we need also to be able to continue to get a very strong position with also the large corporates, and so to be a pan-European player. And when you look consistently over the last 5 years, maybe this year is a little bit different because of a lot of US corporates which have issued in euro. But over the last 5 years, the 3 largest banks originating, let's say, corporate bonds for euro-denominated corporate bonds were Deutsche, BNP, and us. Not always in the disorder, sorry, but more or less, let's say, it showed that we were, let's say, at the heart of this source of financing for our clients and the large ones. So I guess that when you look at all of this, you can see that, yes, we are supporting the capital market, which is to design the pitch, but it's not just securitization, it's not just prospectus, it's not just bankruptcy, that will be enough. And we need so to be consistent in our aim to build a pitch, but also with European players. And then, of course, and especially as of today, there was an ECOFIN, I can only, let's say, mention that when we are talking about tax that is designed to favor, let's say, capital markets, well, financial transaction tax in now 10 countries, no longer 11, will not favor first access to cheap cost of equity and debt for corporates, and second, will not support the localization of strong players, not just in banks. I would say if you don't like bank, I can understand, but also in asset management, in insurance companies, that at some point will not get the same return compared to those which are located in Netherlands or in the UK. And so I think that when we look at a call of evidence, I would say, I think that there is clearly at the level of the Commission also and globally to all decision makers, a kind of reality check to be done to ensure that what we want to build, which is at the end of the day not capital market union, which is to make an easier access to debt and equity for corporate sectors so that they could invest and fund their growth, let's say, has also as an enabler to get a strong banking sector. And I'm convinced that a strong banking sector will come with maybe not the financial transaction tax, maybe not also with the banking structure reform, because let's say I think that the TLAC from the FSB has substituted already to this type of protection in terms of risk, in terms of insolvency. And last but not least also, and I echo to what Robert said at the beginning, more fluidity in terms of liquidity and usage of deposits to finance neighboring countries within Eurozone or in Europe. And there also, French banks are strong. Let's say in Eurozone, you can say that BNP cannot exactly use currently its deposit in Belgium to fund Italy. On our side, even if we have only one major country in Eurozone, we are nevertheless proud to be, let's say, a second bank in Romania and third bank in Czech Republic. And at some point, we are contributing, let's say, to bring the expertise, the skills, and also to develop local capital markets because, for example, over the last 10 years, we have consistently built what we call JVs between our investment banks and these local retail banks, so that, let's say, today, we can offer, let's say, to a private equity fund in Czech Republic access to Euro debt capital markets to finance the acquisition of the O2, so mobile telecom operator in this country. And this is, let's say, a bank which has a local retail bank in this country which is able to do it with head office based in Paris. It's not a traditional US investment bank. So I guess that integration, I'm a firm believer of further integration, let's say, in terms of the financial sectors. And I think that one of the, let's say, necessity to achieve this is, of course, Euro Capital Market Union, but also banking union, and also the fact that at some point we support the skills which are in universal banking, i.e. The cross-fertilization between retail banking business, not just household, but of course middle market, and a capital market and structured financing franchise.